good coffee. Welcome back, guys, to Personal Finance New Zealand with your host, Labuschagne. And today we're talking about an awesome topic. I'm very excited to talk about this because it's not as much research and numbers and stuff as I have been doing in a couple of my past videos. Today's one is a little bit more subjective, a little bit more personal finance in a way. And that's the topic of tracking your finances, and that encompasses everything from budgeting to tracking your net worth to tracking your cash flows and how much you're investing every month. And sort of the benefits of doing this as opposed to just a simplistic budget is that instead of prescribing amounts that you should spend every month on certain categories, you're just essentially doing a post-mortem every month. So you're just seeing, okay, go out and spend your money for the month and then just have a look, review everything at the end of the month. And so my sort of strategy around this and how I think about it is that I pretend that my financials and these three financial statements that I'm about to mention are the financial statements of a company. So I just pretend that I am going out and earning money. I've got some expenses, I've got some assets and some liabilities, and I pretend that I'm a company. And essentially I've got three financial statements and that I use to track my finances more generally. So that's the income statement, the balance sheet, and the cash flow statement. And basically every company has these, and I'll explain more about them in detail in a second. But essentially the question you should be able to ask yourself every time you review your finances, and for me personally that's at the end of every month, is you should pretend that you're a company and you should ask this company, is this company earning more than they spend, or are they spending more than they earn? Is this company increasing the net worth or the equity of the company? Are they paying down debt and acquiring assets, or the reverse? And lastly, does this company have nice, healthy, consistent cash flows every month that it can have the flexibility to direct wherever it needs to? And if some of those terms aren't familiar to you, I'll be explaining them very shortly as we get into my spreadsheets. And just on that topic of spreadsheets, that sometimes is sort of a scary word for some people, and the reason why I like to use spreadsheets is just because it's completely manual. Now that might seem, counterintuitive when you just want it to be easier and more convenient. And I understand that, but in my opinion, for me personally, I like to manually track every single financial decision or transaction that happens. And the reason for this is just so that I have full awareness and full control over what is happening, as opposed to something that's fully automated that essentially basically you can ignore it. Like a budgeting app that automatically does all of it for you, you can just never open the budgeting app. So for me personally, I like to track everything manually and enter everything manually into a spreadsheet. So let's have a look at the three different spreadsheets that I use for tracking my finances and what I update once a month at the end of the month. So the first one here is the income statement, as you'll see on the screen. So essentially you'll see that I have all my income streams and I have all my expenses categorized, and essentially every month you're going to come in here and you're going to say, okay, this month I earned none of these numbers are real, but let's say you earned $1,000 for the month, and let's say you spent $100 on food. Let's say you spent $50 on some sort of entertainment, and you spent $20 on your phone, etc., etc. And you just put all of this stuff in, and you'll see up the top here my net total or my net income for the month is $830, or continuing on with the company analogy, that would be my profit for the month essentially. And you can do all sorts of fancy stuff like graphing, you can see I've got a graph over here, and you do this for every year. So you can see down the bottom I have one page in the spreadsheet, can't remember what it's called, but one page in the spreadsheet for every single year, and every single year I have the months January through December, obviously. And yeah, you can do all sorts of fancy metrics, but that's the basic idea. So the next one is the balance sheet. Now this one's very similar. Essentially going to have your assets minus your liabilities, and you're going to get a net worth number, or your equity in your company. And essentially all you're going to do is every month, once again, you come in here and you just enter, okay, how much do I have across all my bank accounts? Let's say it's $5,000, and let's say in the stock market I have $10,000 across all my investments, and I would include in here KiwiSaver, all that sort of stuff. You might want to put that in a separate line item if you really want to. Just all your assets, cars, houses, any sort of investments, and then put in your liabilities. So if you have any debts, let's say you have a credit card, and I'm going to put in, I got $500 outstanding balance on my credit card that I haven't paid off. If you pay off your credit card every month, obviously that'll be zero for the end of the month. But you can see now that my equity or my net worth is $14,500 according to that little scenario. And you can obviously have all your different growth metrics, so you can see how much it changes every month. So if I increase my cash amount in my stock market assets, you can see for this month I had a massive 72% increase in my net worth, and of course I've got all the fancy graphs and the these weightings and stuff, so I can see I've got 40% cash and 60% in stock market, and obviously you can do what you want there. And once again, I do that for every single year. And I also have another one called all years, and this is essentially I take the net worth number from the December month for every year, and I put that copy that over into another spreadsheet, and I track how my net worth increases over multiple years, which is probably the more relevant one, because it can sort of fluctuate within the year. But anyway, moving on. The last financial statement that you should have to track your finances is the cash flow statement. And this one is probably the simplest one. Essentially, you're going to take your income, not net income, just your gross income from your income statement, and you can come put it in here. So in my example, I earned $1,000 for the month. And then you're going to put in your recurring expenses. So these are fixed expenses that you can't reduce at all. So these are bills and stuff that automatically get withdrawn from your bank account every single month, and they don't vary every month. So let's say my living expenses is $500 a month. That's my utilities, my water, my electricity, internet, all that sort of stuff. And then you also want to put in how much of your money you put into buying new investments for the month. So let's say I put $100 away into some index fund, or to buy a stock that I really like, and you put that in there. And then you can see I have this number called free cash flow, which I've now calculated. And this is essentially how much money do you have left over after paying all the necessary bills that you can't change at all, as well as investments. And this basically tells you how much money you can spend on all those unregular expenses, so your food and your clothing and entertainment, discretionary purchases. And it also means that if you consistently every month find that you're earning less than how much free cash flow you have in terms of those unregular expenses, then it probably means you have some room to increase how much you're investing every month, which is always a good thing. So yeah, once again, you can add in all your own metrics and see how much it grows every month. So let's say you get a little bit of a raise and you manage to, cut some subscriptions and that sort of thing. And let's say you increase your investments by $150. You can see my cash flow is actually increased by 62.5% in 1 month, which is probably not realistic, but that's just an example. And again, you do this for every single year. So far I've only done for myself for this year, or 2021, just because this is the first year that I've really started investing and having regular expenses and all that sort of stuff. So yeah, those are the three financial statements. I really hope you've enjoyed the video. I hope this sort of helps you out and gives you some ideas of how to properly track your finances. And yeah, the key thing is to think about your finances as if you were a company. And if you saw these financial statements for a company, would you invest into that company? Or basically, would you invest into yourself based on those numbers? And yeah, so it's sort of a good motivator in that way. Yeah, thanks for watching, and hope you have a great day. Of course, if you have any questions, leave them in the comments. I'd love to hear your feedback. Thanks. See ya.